Asian equities have continued to extend the past day's sell-off after China announced a series of tariff hikes on U.S. goods in retaliation to Washington's own hike last week. Hong Kong played catch-up today after reopening following a public holiday. It led the declines by falling 1.5%. Meanwhile, in China, the Shanghai Composite rattled as well, shedding 0.69%. The yuan showed signs of volatility, displaying stress in the markets and plunging to a new 2019 low before ending up against the dollar. It's now at 6.9 per dollar. In Tokyo, the Nikkei also seeing red. It posted a modest decline of over 0.5%. The Kospi was one of the rare indices clawing back some of the losses today. It was up 0.14%, but weakness is still prevailing in the country's currency. The won was down against the dollar. It's now at 1,189 to the US dollar. Now, markets on edge as the trade war continues. Just last night, Beijing announced tariffs on $60 billion worth of U.S. tariffs. China has taken aim at some of the most important U.S. exporters, hundreds of food products, including meat, as well as alcohol and electronics. They stand to be hit by tariffs from 5 to 25%. Let's take a look at how this compares to their U.S. counterparts. Last week, Washington announced a raise in current duties from 10 to 25% on $200 billion worth of Chinese goods, such as food, electronics, and medical equipment. The Americans are also looking into throwing in additional tariffs of up to 25% on a further $300 billion of imports. But both have also kept the discussions open for further negotiations, with both China and the U.S. agreeing to keep talking about the trade dispute. Now, for more, Dr. Wang, an analyst from the Economic Intelligence Unit, joins us now from Beijing. Firstly, the decline after decline, do you see Asia wiping out this year's advance?
Well, certainly the flare-up of the trade war is no good news to the stock market in either China or the rest of the world. But when we look at this, we have to think about two factors. One is that although the tariffs are being imposed as we speak, the trade talk is still going on. So there is still a path leading to cutting tariffs and eventually eliminating it. We are still expecting some sort of a deal, no matter how limited it is. And the other factor is that both countries and a lot of the other countries, I believe, will have their central bank adjust interest rates and the monetary policy in general. So the trade talk is a very important factor, but it is just one factor among this very complex equation.
Well, the offshore yuan also dropping. Can Chinese authorities keep depreciation in check, and for how long do you think?
I don't doubt the ability of China's central bank to defend the valuation of its currency, mainly because of its really large reserve, the $3 trillion of foreign reserve. So if needed, the Chinese government can require the central bank to just offload some of the U.S. treasuries, which will provide a booster to the yuan valuation.
And let's talk about the trade talks then. Washington paving the way for more tariffs. How do you see China responding? More tariffs, or will they go nuclear and start dumping treasuries?
Well, we think that there is still some window of opportunity before June for some sort of a deal to come out. But in terms of retaliation, besides tariffs, actually, what's going to be more effective would be the non-tariffs barrier in terms of issuing visa to the U.S. visitors and more inspections and slow issuance of licenses for U.S. companies. So overall, China still have a lot of tools in its toolbox, but just dumping the U.S. treasuries is not one of them, for a simple reason, because it's closely tied to the valuation of the yuan. If the central bank dumps a certain amount of the U.S. treasuries, it has to write off an equivalent amount from its liability, which is in terms of RMB. And that's the same thing as a money contraction. So if that happens, that will pose a huge revaluation pressure on RMB, which is not desirable for the central bank to see.
Yeah, and just one last quick question for you. What does it mean for consumers? How soon do you see them taking a hit to their wallet with all these tariffs?
Right. This is a very important question. We have to ask who is ultimately paying those tariffs. Could American buyers ask their Chinese supplier to lower the prices, or do American buyers have to accept the higher prices and then pass on to the American consumers? From what we have read, according to various studies by scholars, it looks like that the tariffs has been imposed to date has been passing on 100% of the cost to the U.S. consumers. So if this goes on, when we see the 300 billion of the Chinese exports subject to new tariffs, we can expect a rising inflation in the U.S. economy.
All right, many thanks for that, Dr. Dan Wang, analyst from the Economist Intelligence Unit.